do that. And make host.
Okay. Alrighty. So today we're going to be covering the Restaurant Revitalization Fund, which is offering grants to restaurants and like businesses. I've updated this information today. The information for this program keeps coming out in little tiny bites and pieces, so I've been updating this PowerPoint now for a couple of weeks as I've gotten more and more information about it. So my name is Chris. I work at Prix Fixe Accounting, and we are a bookkeeping and accounting firm that works specifically with restaurants to help them understand their business a little bit better and focus more on their business and operating their business and less on the accounting. I want to start off by giving a brief moment of thanks to a couple of organizations that have helped to get us to the point where we are now. The reason that we have the Restaurant Revitalization grants is because of lobbying efforts on the part of primarily two organizations, the Independent Restaurant Coalition and Mass Restaurants United, which have put together a lobbying effort to make sure that we got the money and aid that we so desperately need. If you haven't had a chance to yet to subscribe to their newsletters, I highly recommend doing so. Once we get beyond this, I just want to stress the importance of supporting organizations like this and continuing to ensure that we have somebody that is interacting with Congress to get restaurants' voices heard. Because if there's one silver lining to the whole COVID epidemic, it's that it has brought a lot of independent restaurants together to create organizations like this and get conversations started. So without further ado, I'm going to go through the details of this fund. This bill was passed. This bill was passed in the middle of March. And when they had passed the bill, they were talking about this program launching in weeks, not months. Unfortunately, that doesn't seem to be the case. They've had problems with the shuttered venue grants, and it seems like the timeline is being pushed out because of those issues with the other grant program that the SBA is dealing with right now. So we're looking at the reality of this program likely is going to be launching sometime in early May. So we still have a few weeks to get more information about the program and get everything together in order to apply. This program is quite different from a lot of the other programs that we've seen the SBA put out. It's a grant, it's not a loan, so there's nothing to pay back. And so far, there really isn't any sort of like documentation process that they have illustrated that you need to deal with. The SBA is managing this grant, so you're applying for the grant through the SBA directly rather than the banks like you were doing with the PPP. You must demonstrate a loss of revenue. If you are in a unique position where you were doing a lot of takeout business and your revenue in 2020 actually increased from the previous year, you're probably not going to qualify for this grant. You have to have under 20 locations. You can't be publicly traded, and you can get up to $5 million per location or $10 million per group. All businesses that were in operation before March 10th, 2021 qualify for this program. So there are a lot of businesses that opened in 2020 that were excluded from the PPP and weren't able to get aid there, that are now going to be included in this grant, which is a huge, which is really huge for a lot of these newer businesses. If we look back to the beginning of 2020, I think a lot of us in the restaurant industry were really excited about what 2020 had to offer before COVID hit. It was a pretty decent winter for a lot of folks. People were looking at expanding, and were in the process of maybe adding concepts, and they were left out, hung out to dry by the PPP. Preferences are going to be given to owners that are either women, veterans, or other socially and economically disadvantaged groups for the first 21 days. First thing with that is that you can still apply if you, in that first 21 days. So when the application becomes open, you can apply at that point. It's just they're going to prioritize those groups first before they move into accepting the applications of other folks. So once that application opens up, apply for it regardless of whether or not you fall into one of these groups. You'll also notice that there's a percentage there, 51%. So if you are husband and wife, business owners, and it's 50-50, that doesn't quite qualify for that. It has to be over that 50%, 51% or over, okay? And there's another interesting part in here where it says socially and economically disadvantaged groups. That pool of folks has not quite been defined yet. We're still waiting to see what exactly that is going to be and who's included in that. They haven't come out with the exact list of individuals. The economically disadvantaged, we think that it's probably going to be this next bullet here. $5 billion has been set aside for businesses that are under 500,000 in annual gross receipts. So if your annual revenue is under $500,000, there is a specific pool of money that is set aside until the remainder of that money is depleted of the other $28 billion. You also must certify that you have been negatively impacted by COVID-19. So you have to say that this has impacted you negatively. For nearly everyone, that's going to be a pretty easy certification. The other thing is that if you are the disadvantaged groups, that is also a certification as well. You don't have to provide any proof for that. It's just that you have to self-certify that you do fall into one of those groups. Businesses that are eligible for this program. The obvious one is restaurants, but food stands, food carts, caterers, bars, brew pubs, they all qualify. Tasting rooms also qualify. Event spaces kind of fall into that area as well. And then hybrid businesses also qualify. So if you have a retail setup and also maybe like a cafe, so like a bookstore, for example, you qualify for this program as well. It's just you have to have over 33% or over of your revenue needs to be F&B. So, and it needs to be for 2019 as well. So there are a couple sticking points with that, but if you do have a hybrid business, it does apply to you as well. They need to be under the same EIN. So it needs to be the same tax filing. It can't be two businesses. It needs to be that one. Things that disqualify you from this program. If you've taken a SVOG grant, you can't apply for this. If you're a local government, you can't apply for this. Nonprofits have yet to be determined, but it's likely that they're also going to be disqualified from this. If you're permanently closed, you don't qualify. If you shut down and you're just in kind of just hanging out waiting for this all to blow over, you still qualify for this program. But if you're permanently closed, you don't. If you filed for bankruptcy, meaning you filed Chapter 7 or Chapter 11, you don't qualify. But if you've taken some of these lesser known bankruptcies, you may be eligible as well. And if you're an affiliated franchise, you don't qualify as well. If you don't know what an affiliated franchise is, it's unlikely that you are an affiliated franchise. So, how do you know how much money you're eligible for here? There's 3 different calculations. And most people are going to fall into calculation 1, which is the simplest one, thankfully. It's your 2019 revenue minus your 2020 revenue, minus the PPP loans that you have taken. So the total revenue from 2019, total revenue from 2020, subtract the PPP loans that you have received, not forgiveness, just the loan totals, okay? And that's draw 1 and draw 2 together. If you opened in 2019, they have a little bit of a trickier calculation here. You have to look at the number of months that you were open. So if you opened in July, 6 months, you have to divide that by divide that by 6 for the months that you're open, and then multiply it by 12. Basically, what they're trying to figure out is if you were open the whole year, how much revenue would you have made? Okay. So you get that number so that it brings you up to a 12-month equivalent. And then you subtract that by the 2020 revenue, and then you subtract out the PPP loans as well. Calculation 3 is going to be the most, or the more complicated option here. And that is going to be if you opened in 2020. So what is going to happen there is you're going to calculate all of the eligible expenses that you have incurred since the beginning of 2020, it looks like, but that's yet to be determined. Subtract out your 2020 revenue. Restaurants that have not yet opened by March 11th, 2021 are also eligible for this program. You do have to show proof that you are going to open after that point. They haven't figured out what that mechanism is, but if you still have not opened but are planning on opening, you do qualify for that program, this program.
Can I ask a quick question?
Sure.
Go back to the first one, the calculation, was that, can you explain the difference between when I kind of missed it when you talked about loan versus forgiveness? I mean, what's the number? You know, what?
So it is when you first received the PPP loans, the loan total that you got on the loan agreement. Did you get both or did you get one?
I got both. Yeah.
Okay. So look at both of the loan agreements and the loan
Yeah.
totals, add them up, and that's what that number is there.
Okay, that's what I thought. But when you said forgiveness, I mean, the first one was forgiven, so that's still subtracted though.
Yes,
Right.
It doesn't have, if it's forgiven or not forgiven, it doesn't.
It doesn't matter if it was forgiven or not, right? Okay, that's what I wanted to make sure. Okay.
Yep, no problem.
Thank you.
So for calculation 3, the thing that you're going to have to look at are the eligible expenses, because not all expenses qualify here, but it's pretty wide ranging. We have payroll expenses, rent, utilities, including triple net charges, maintenance, outdoor seating construction, protective equipment, food and beverage, operational supply expenses, which operational expenses basically are everything for a restaurant. Debt obligations to suppliers and debt payments, that's a big one. And any other supplier costs that are defined by the PPP. So if the PPP changes what they consider covered costs, this changes with that. So now that we kind of know all of the details of the program itself, we need to talk about how you actually go through and apply. There was a huge step in this to start off with. And so if you've been paying attention to this program, You probably have heard the name DUNS or SAM mentioned, where you had to get a DUNS number and a SAM registration and these numbers that were discussed at length. You don't need to anymore. That is done. If you've already gotten those information and you've gotten those numbers, that's fine. But you don't need to if you have not gotten them yet. That's a huge perk, because that whole application process was going to be a monstrous pain in the ass. So that's gone. What we're left with is just the application with the SBA itself. So they haven't launched the portal yet online, but it will go live in the next couple of weeks so that we can see what it looks like before we can actually apply. The list of things that they have either said is going to be required or are likely going to be required is in this list right here. And as a note, this PowerPoint will go out to everybody that's attended so that you can get this list and you don't have to quickly scramble all this down. So the list is like the basic thing that you would apply for any loan, the basic information. Your legal name, your DBA, your EIN number, your business address, all those sorts of things. As we get further down this list, though, it gets a little bit weirder, okay? So the number, your business officers and shareholders that have more than 20% in all of their information, you're gonna want that. A NACIS code, which you can find on the tax returns. It's called the business number on the tax returns. And then proof of revenue. This is a big one. So for a lot of folks that are probably in this room that have applied for forgiveness and have gotten forgiveness, you're probably on extension. And most people that are in the restaurant industry are currently on extension anyways. So the SBA knows that you're not going to have your tax returns done, or it's unlikely that that's going to be the case. And you don't need to harass your CPA to get the tax returns done. So what you can do is you can provide your 2019 tax returns if you have those done, and then you can supply the SBA with prepared financial statements from your accountant, or a POS report, or a 1099-K from your credit card processor. So they're giving you other options to provide. Your prepared financial statements are like your P&L, balance sheet, statement of cash flows. The SBA is going to want that. It's going to take the SBA longer to process your application if you're providing them with the prepared financial statements, because they have to like go through the application with a finer fine-tooth comb. It's better if you have the tax returns, but it's still completely sufficient to provide them with the financial statements. So if you don't have your books done for 2020, try to get them done while you still have the time. It's fine if you don't have the tax returns done. The last item is what's called a 4506T, and that is a government form that allows the SBA to request your tax returns from the IRS. It's basically just a release that says, yes, it's okay if you want to inquire about any other tax returns that I have. So next we have some Q&A here. I'm going to go through a lot of the questions that I know a lot of people are asking. One of these questions that William asked, I'm about to answer. And then some other ones that a lot of people have asked in the conversations that I've had about this program. The first is, how does the SBA calculate what revenue is? Well, or gross receipts as they call it. It's the sale of product and services, so food and beverage sales. Any sort of interest or dividends that you get from any sort of investments. If you sublet and you rent to somebody else, that counts. And then any discounts or allowances, so like an ownership discount or a coupon or something like that, those discounts count as revenue. So that decreases your revenue because the discounts decrease your revenue. So that's an important one you want to make sure you include. Receipts don't include capital gains. They don't include sales and meals tax. They don't include proceeds from transactions or reimbursements for purchases to employees or anything along those lines. If you've gotten an EIDL advance or any of these local, state, or federal grants, it's unlikely that they will count towards revenue, okay? They've said it multiple times now. It's unlikely that they're going to suddenly change course on that. So if you've gotten any of these grants, if you've gotten an EIDL advance, it's likely not going to be considered in your revenue numbers. Will this money run out? The likely situation is probably yes, but what we actually want is for that money to run out. Congress is prepared for the fact that it's probably going to run out. So we want that to run out as quickly as possible so that we can go back and ask for more money. If there aren't enough people applying for it, then a lot of people aren't going to get, they're not going to replenish that fund, okay? So if you know people that are unaware, other restaurant owners that are unaware of this program, make sure that you tell them about this and make sure that you get them to apply for it, because that is contingent upon restaurants getting more aid that they definitely need. Should I get a PPP or this grant? The PPP is getting dangerously close to running out of money. They're in the last few millions of dollars before the money runs out. And it's probably unlikely that they're going to issue any more funds for the program because it's been a while and the applications are waning. So it's a question of risk for you. The PPP you can apply for right now, you can probably get it pretty easily. The grant, we don't know when that grant application is going live. It could be a month, it could be 2 months, it could be a week. So if you need the money in the short term in order to get through these next couple of months, the PPP might be the option that you want to go with. But if you can afford to wait, there's a whole lot of less red tape to deal with if you go with the grant than you would if you went with the PPP. So it really depends on your risk tolerance and what helps you sleep better at night. Do the ERC grants or EIDL affect this grant? No. The only thing that they say with this grant is that if you took ERTC credits or you took the EIDL money, that you can't double dip. You can't say I paid the same employee with both sums of money. So you have to make sure that there is a difference there in terms of what you're spending that money on. You can't spend $2 federal dollars for $1 of your personal expense. And what if I don't use all the money? In the insanely unlikely scenario that you don't spend all of the money, you have until December 31st, 2021, and then technically you're supposed to pay it back. I don't see that happening for anybody in the restaurant industry. It's pretty easy to spend money in the restaurant industry, but if that does happen, then you're technically supposed to give it back. They ended up not making it allowable. I think that they're probably going to break with the PPP on this and allow it based off of the conversations that I've seen them having about it. It's a super specific issue to restaurateurs where they buy the property and they rent to themselves. And it's so common that it seems kind of crazy that they wouldn't allow you to be able to pay yourself the rent that you are owed. But it would essentially be paying yourself rent as opposed to paying the mortgage directly. Okay, let me.
So I have a question to follow up on that. Is that allowable to pay yourself rent? I mean, that would be the issue.
Right. That it has yet to be determined for sure that that's the case, but it's likely that that they're going to try to make that an eligible expense to pay yourself, because it's such a common scenario. Yeah. So while we have some people coming back in, I wanted to touch on a couple of things with this PPP, or with this Restaurant Revitalization Fund. The important thing with this is to follow a couple of different organizations in order to find out more of this information, because the way that this information is coming out is very piecemeal, and it's coming through a lot of the lobbying organizations and not the SBA directly, which is kind of an unusual change of pace. So if you would like, you can subscribe to our newsletter. We're only sending out information about the Restaurant Revitalization Fund right now. We try to make it, we try to write it in human so that you can understand it and use as little accounting speak as possible. So feel free to subscribe to our newsletter. Also, if you're on Twitter, follow the SBA and turn on notifications. I hate notifications, but that seems to be the way that the SBA prefers to disseminate information. Also, the Independent Restaurant Coalition and Mass Restaurants United are also paying very close attention to these programs, and they're also sending out information and trying to interpret this information for people. So if you have the opportunity, follow both of those organizations, and they'll provide you information on multiple platforms as well. Another question is, is the COVID expense time period from 2/15 to 3/11/2023? So if you have a new business, that's really the only period of time that you're going to have to worry about the expense side of things. Let me just switch back to the calculation here. The only thing that you're going to have to do for the expenses, if you fall into Calc 1 or Calc 2, Calculation 1 or 2, is you're going to have to certify that you spent the money. There isn't any mechanism for proving that. They might audit you, the SBA might audit you, but you don't have to necessarily prove that you've expended the funds, just that you have expended it by the end of this year. For calculation 3, and you've opened in 2020, the period that you're able to look at, the end period is until the end of 2020 or March 11th, 2021. This is where it gets really gray. Where those expenses start has not quite been determined yet. It's probably going to be that 2/15/2020 date that they keep using. So to re-summarize that, because that is quite confusing, is that if you're in calculation 3, it's likely going to be 2/15 through the end of the year, or March 11th, 2021. That's yet to be written in stone, so don't take that for sure as gospel, but that looks like where it's going based off of the conversations I've seen. If anybody has any other questions, I'd be more than happy to take them now. If you have anything else that you were wondering about for the application. What can you do to prepare for the application? Great question. So if you apply, what you want to do right now while you're waiting is to pull together this final list and make sure you have all the items on this list. The only thing that you're not going to have to deal with until the point of application is that 4506 form. That's going to be built into the application process. You're going to want to have all the items that are on this list, and then one of the options for proof of revenue. So you can choose any of those 4 options. The best option being the tax returns. The next best being prepared financial statements, and then the POS reports or 1099 reports. You want to stray away from giving them your bank statements because that's going to take them a long time to figure out. Alrighty, well, did anybody else have any other questions about this program?
I got booted out and just got back in. Will I get a copy of this? Because I missed when they switched.
Yes, we will send out a copy of the presentation. You actually didn't miss too much. It was like the last slide that we were on. So
Okay, I was going to say I missed all the questions, so I don't know what people asked, so I had to ask. But okay, thank you.
Yeah, and if you want, I can connect with you separately too if you have any other questions.
Yeah, I actually would like to, but I have a couple questions and I don't want to take up anyone's time.
Yeah. Well, can you speak to the size of the grant? Is there a choice? We don't know if there's a choice yet. What I would say is that if the grant is going to be sizable, for example, if the ones that I've seen that really are going to be substantial are like catering businesses because they basically had no revenue in 2020. You can give the money back. So if it is a sizable amount of money and you're a little bit afraid of the money, take the money, the full amount of money. If you don't spend, and put it into a separate bank account. Transfer out whatever you need or pay for whatever you need directly out of that account. And at the end of the year, if there's still money left over, you can always give that money back. I think that as restaurant people and trying to be hospitable, like there is an underlying culture of not wanting to take more than you need. And I would stress that now isn't the time to do that. Take what you can get. And if you want to give, only use what you can and then give back, then just put it into a side account and leave it for later. Will there be reporting after receiving the grant to the SBA? At this time, no. But with the PPP, what they did is they, after the fact, added money for audits. it's likely that a small portion of that money will also be subjected to, or will be allocated for this program. But at this time, they're not saying that there is any reporting that you'll need to do. That isn't to say that that's going to change in the future. Are new restaurants eligible or only if you had a business created prior to 3/11/2021? You need to have a business that was, you need to have shown expenses prior to 3/11 and show that you are open. So if you are continuing to be closed after this point, then it's going to get murky and you might not be eligible for it. Alrighty. Well, if anybody else doesn't have any other questions, I am going to I'll give you my email here, and you can feel free to shoot me any emails for any questions that you have, or you can send them to Michaela, and she can forward them to me as well. But it's hello@prefix.accountants. If you have any questions about anything that pops into your head after this or that you currently have, feel free to shoot me an email. And if I know the answer, I'll try my best to find out what that is. When do you think this grant will come out? That is the question. Yeah, a month maybe? They've been saying 2 weeks for like a month and a half now. So I'm going to just go ahead and say a month at this point. They do have a 2-week testing period that they're talking about. So even at the earliest of 2 weeks, I find that highly unlikely. I think it's probably going to be the middle of May at this point, at the earliest.
Awesome. Well, thank you, Chris. I appreciate you taking the time. Sorry, everyone, for the technical difficulty. You will all the attendees, registrants will get an email with this handout, a recording of the workshop, and a few more resources and information for upcoming workshops that's relevant to restaurants. So if there's no other questions, we're going to end it here and enjoy the rest of your Wednesday, everyone. Thank you again.